Mid-caps see a big wave of green as advances far outstrip declines, even as the frontline indices mark time doing well still. Financials and industrials big gainers, while FMCG and consumer durables drag.
The group of ministers has recommended creating a new 35% peak GST rate for tobacco products and aerated drinks, along with higher taxation for pricier clothes, watches, shoes, cosmetics and other luxury consumption items. On the flip side, it proposes GST relief on life and health insurance.
The HDFC Bank management tells CNBC-TV18 in an exclusive interaction that it will take the securitization route to raise resources and sees this rising from 15,000 crore rupees to over 100,000 crores in a few years. The bank is also sanguine on growth and expects to outpace the industry with pre-merger metrics by 2027.
Axis Bank tells CNBC-TV18 the second quarter GDP growth number was a shocker and there is not much credit demand coming from corporates, even as SMEs see strong growth, while the bank pulls back on unsecured credit. Deputy Managing Director Rajiv Anand hopes that the Reserve Bank of India will help address the liquidity issue with a CRR cut. Good afternoon, you're with us here on Halftime Report on CNBC TV18. I'm Hormuz Patakia, with me is Mangalam Malu. Continuing from where we left off yesterday, The Nifty is now finally above that key resistance zone of 24,350. Now, well above that actually. Now it's almost nearing 24,450 as we speak, nearing the highest point of the day. Contributions coming in from the banking stocks. The Nifty Bank now nearing the 52,700 mark as we speak, a percent higher there. The PSU Bank Index continues to grow higher as well. 2.5% higher on the PSU Bank Index, nearing levels of 7,000. The broader markets too continuing to do well in tandem with the benchmark indices. The mid-cap and the small-cap index both trading with gains of around 0.6%. The only underperformer in today's session, Realty and FMCG. These are the two sectors, and FMCG of course has reasons of their own, but to pull up stocks like ITC, pull up stocks like Varun Beverages, and you'll see that they started off lower. Even the FMCG index has recovered some ground from the lows of the trading session, and ITC too, as has Varun Beverages, recovering some lost ground. But of course the news of the morning is that the group of ministers set up by the GST Council had proposed rate changes for 148 items, including a special rate on tobacco and aerated drinks. Mangalam has more details on that. Mangalam.
Well, this is as per sources to our colleague Tim C, who's found out that the group of ministers has gone ahead and made these suggestions to the GST Council, which will then decide whether to implement on those suggestions or not in its next council meet, which happens in Jaisalmer in on December 21st in 2024. Itself, the more important part from a listed standpoint would be what happens to this special rate of 35% on tobacco and tobacco products along with aerated beverages. The street was working with a number of 28% up until now with a compensation cess, which was both specific and ad valorem. The big question is this rate increase over and above the compensation cess or in lieu of it? With the kind of commentary that we've heard from, all the experts, etc. so far on our channel, it seems that this is over and above the compensation cess and not in lieu of that. If it is over and above the cess, which is what the overarching theme right now and expectation right now is, it could mean an increase of 5 to 12% in tax incidence over and above what they're paying right now. So for them to actually make good of this, they will have to take price hikes of anywhere between 5 to 7% or risk losing their earnings before interest and tax by about 5 to 7% itself. The other two scenarios, which is scenario 2, if it's in lieu of the ad valorem portion of the cess, it is largely rate neutral. We've discarded that theory for now, and the others as well. We've discarded that theory too. The stock price is down about 1.5% because the street is reacting to the worst case scenario, which is an increase of over 3 to 5% in prices or an EBIT loss of 5% as well. But the fact that also over the last 5 or 6 years, taxation on cigarette has been fairly stable, and secondly, this is still at a recommendation stage and not the final stage. Maybe the street has made its peace with just about 1.5% in terms of a cut for both ITC and aerated beverages. You have the listed play in the form of Varun Beverages.
Interesting, right? They're awaiting more clarity. And of course, there's this knee-jerk sentiment reaction as well. Varun Beverages at one point was down 5% earlier this morning, but now has recovered ground. Now is trading around 2% lower, as is ITC and most of the others as well, right? Be it VST Industries, be it Godfrey Phillips. Most of them have not seen an adverse reaction on a news like this. Of course, yes, yes, as Manglam just highlighted, that the street is making peace with the fact that this is just a recommendation and not a final proposal just yet. Godfrey Phillips also off the lows of the day, down 1%. ITC also off the lows of the day, down 1%. And Varun Beverages too, recovering some lost ground. In fact, VST Industries has also turned positive as we speak. But moving on then, here is a big exclusive. HDFC Bank is looking to make securitization a new avenue to raise resources. Now, the bank sees many of its parameters like loan growth and loan to deposit ratio returning to pre-merger levels by 2027. Now, the bank is garnering increased synergies from the merger, with 95% of new home loan customers opening an HDFC Bank account. Now, Lata Venkatesh, who caught up with the CEO Shashi Jagdishan and CFO Srini Vaidyanathan, has a bunch of key takeaways. Lata, good afternoon.
Yes, it is, a slightly rare conversation. We don't get the CEO and CFO of HDFC Bank on camera very easily. So an off-camera conversation was very useful. And let me start with a caveat that the guidances in terms of margins and all are what is in the public domain, they said. But I got a lot of insights into strategies. And one of them is, at the moment, a big securitization of their auto loans is in the market, some 13,000 crores. So we started the conversation and he said that at the moment it is experimental, Shashi Jagdishan said. But in course of time, it can become a new avenue of raising resources and can go to even, who knows, $1 trillion a year in terms of resources. But on the more important issue of their loan deposit ratio, the Srinivasan Vaidyanathan, the CFO's point was that they have actually advanced their timetable of reaching to the pre-merger ratios. Loan to deposit ratio used to be 85 to 90%. That is for 100 rupees of deposit, about 85 to 90 of loans. They had gone above 100 because of the HDFC merger, but originally, they thought it would take 4 to 5 years to get back to pre-merger loan deposit levels. Now they're happy to say it'll happen by 2027. And the other thing which they've already said in their investor conference day, right now they will grow below the market because you want to grow loans more slowly. So at the moment, this year, loans grow below the market. Next year, with the market. And in FY27, it will be faster than the banking sector. That was their goal. The other important, obviously newsy topic is bancassurance. Their point is that from the start, we have preferred an open architecture of, this was Shashi Jagdishan's point, of selling various products to the banking customer and not just one company's products. Also, they said they have a very good system of video recording, etc., to ensure that the customer is not coerced, to make sure their compliance ensures that. The other point, however, is if they have not heard from the regulator, but if the regulator insists, then, the possible collateral could be that insurance penetration may slow down if bancassurance is not allowed to be a very big sector in selling insurance policies. The other topical issue, of course, was HDB and its listing. The Shashi Jagdishan said that they are aware, of course, that RBI doesn't want the business of the bank to overlap with the business of its subsidiary, the NBFC. And they said, yes, both of us give loans, but our customers are very different from theirs. They normally cater to people who are willing to pay higher loans, basically, higher interest rate, basically riskier loans. So there is no overlap. But if the regulator insists, which could happen, it's only a financial investment, they will pare down the investment. They already have plans to pare it down when it lists, but they will pare it down faster if the regulator so wants. That's where that plan stands, waiting to hear from the regulator. The other big talking point, of course, is unsecured loans. This was the only bank in Q2 which grew its unsecured loans faster than a previous quarter. All other banks were bringing it down. And their point is that we could smell it ahead of the curve. They say they always do that. They could smell the trouble, so they had lowered the unsecured loan space in previous quarters. And now that no one wants to go there, all banks are abandoning it. They are getting some, mouth-watering opportunities, and which is why they are able to grow. And they point out that, that has not led to any increase in slippages for them. The other big point, of course, which investors want to know is synergies. What is the point with the merger? And they had a few things to boast about. Srini Vaidyanathan pointed out that for all new home loans, 95% of them open an SB account, savings account with them. At a time when you badly need deposits, this is a good one. And as for the legacy loans, which they have got from HDFC, less than 1 million of those 3 million loans had SB accounts with them, savings accounts. Now 1.7 million of them, that is over half of them, have savings accounts with them. Also, once you have trusted someone with a home loan, that person's KYC is well done. So with the click of a button, they're able to sell them high-value credit cards and consumer durable loans. So that is growing 4x. To this set of customers. And finally, I asked them about the mahal. After all, GDP numbers were not very good in terms of consumption. And they said, yes, we could sense that mass consumption products loan products are not doing well. Luxury cars loans more than sedans and small cars. Luxury homes loans more than, affordable housing. Larger consumer durable loans rather than smaller. That trend is very much visible now.
All right, Lata, thanks a lot for creating this mahal of, explaining the entire thing, the environment as HDFC Bank sees it. Things are getting better a lot faster than what the company had earlier thought of for their own, on their own, accord. But importantly, the environment, the K-shaped continues, and as it were, we'll be very interested to see, what happens to the demand of these luxury products with a proposal of a higher tax on these luxury products.
You are right.
So we'll keep an eye out on...
You are best placed. You are our consumer king.
But, the thing that I know from my economics class, and Lata, you'd know this a lot better than all of us put together, is the Laffer curve. That,
yes.
The government revenue increases in line with the tax rate only up to a certain point. Beyond that point, even as the tax rate increases, the revenue that the government gets reduces. So let's see how that
India
pans
learned
out.
this painfully, I believe, in the 70s. I believe at that time, taxes used to go even to 97% for a ekdam top economics.
Right. Okay, Lata, thank you so much for putting perspective. That was truly an insight edge coming in on HDFC Bank and a lot more as well. We take a short break. On the other side, we get to excerpts from our conversation that we had with Rajiv Anand, who's the Deputy Managing Director at Axis Bank, on the GDP numbers itself, the upcoming RBI policy, and a lot more.
Back with us here on Halftime Report. Now, Axis Bank's Deputy Managing Director Rajiv Anand says that the growth slowdown was quite palpable following the second quarter earnings. Now, speaking to CNBC-TV18's Ritu Singh, he said that credit demand from corporate India is not much. On the upcoming RBI policy, he said that while a repo rate cut is unlikely, a CRR cut will be a welcome move. Listen in to a slice of that conversation.
The 5.4 obviously was a bit of a shocker, but I think if you looked at the numbers in Q2 across the entire spectrum of corporate India, I think the growth slowdown was quite palpable. The question really is this cyclical, and how much of this we will be able to make up in the second half of the year? I think from a bank perspective, corporate India is deleveraged. Their own cash flows are, continue to be quite strong. And so therefore, to that extent, we don't see that much of demand, from corporate India at this point in time. Our SME and mid-corporate book continues to grow quite strongly. Our mortgage book continues to grow reasonably strongly. But I think the fact that we've seen some delinquencies on the unsecured side has been well articulated, and so therefore all banks, including us, we pulled back on growth on the unsecured side.
So if you talk about credit growth, where is it coming from? What are your focus areas? Any larger figures, since now we're closer to the end of the financial year, what kind of range could Axis Bank get to?
What we've been guiding the market is that we will grow 200 to 300 basis points higher than the market, through the cycle.
Speaking of liquidity, there's been some expectations from some parts of the market that perhaps in this upcoming monetary policy we may see a CRR cut. What's your own expectation? And if there is a cut, what would that mean for the bank? How much excess capital could be released for lending?
I think the fact that we've seen this print on GDP growth has certainly surprised everyone, and I'm sure RBI is redoing their numbers as well. I think your channel has already articulated the fact that with 6.2% on inflation, it's unlikely that we will get a repo rate cut anytime soon. I think it's a very close call on whether a CRR cut is something that we will get on Friday. On the one side, yes, I'd be delighted if the CRR cut comes through, because one of the things that I've been mentioning on your channel as well is the fact that despite the fact that the repo rate is at 6.5%, banks on the margin are raising money at anything between 7.5% to 8% for 1 year deposits. And I think that gap needs to come down, and I think a CRR cut will certainly help, bringing that down. But I think, to my mind, I think it's a close call.
Well, so you're not expecting any repo rate cut, and that, I suppose, is good news as far as the short-term outlook for your margins is concerned?
I think, given the fact that much of the book is EBLR linked, a repo rate cut will have a short-term impact as far as margins are concerned. Remember that banks are a marginal cost business. If the repo rate comes down, it is inevitable that deposit rates will come down as well, perhaps with a lag. And I think as we think of NIMs through the cycle, you'll find that in India, NIMs have been in a fairly tight range. While we do spend a lot of time and energy trying to manage and have conversations around this, NIMs will continue to stay in a fairly tight range for banks.
All right, interesting insight coming in on the banking space. What we'll do is, as we slip into a short break, let's get you some good news for our viewers. India Business News Leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates all on your fingertips. All you got to do is download the CNBC TV18 app from either the Apple Store or the Google Play Store, depending on the phone that you use, and get cracking on the move.
The most authentic and reliable business channel. It's been fantastic the way they report everything. So my message will be that, first of all, congratulations for 25 years. It's a huge accomplishment, for any brand to sustain itself so consistently over a period of time. And just keep on doing the good work. And if you keep doing the good work, it'll be another 25 years and another 25 years.
The market's doing extremely well, so good time to get you the F&O updates at midday itself. So a bunch of indices which are outperforming today. We have the Nifty Bank, which has actually led the gains that we're seeing on the Nifty, which is holding around that 24,400 mark itself. The mid-cap index holding with a gain of almost 0.6% as well. 24,350 to 24,400 has been a bit of a resistance zone. For the individual pack, where the Adani Group stocks actually bouncing back. Adani Ports among the top Nifty gainers with the 6% up move. Even if you look at the cement pack, alongside all the other cement stocks which are doing well, the Adani-owned cement stocks are actually spiking a little more. Ambuja Cement, for instance, up around 4.5%. With this up move that we've seen on the Nifty, what are the option writers doing? Put writers fairly active at the 24,400 mark, telling you 24,300 now becomes an important support. In fact, at the same time, we've seen some writing at the 24,300 put as well. So between 24,200 to 24,300, the support has moved higher from around 24,000 to about 24,200 to 24,300. The resistance, has that moved on or not? Because, with the up move that we've seen all of last afternoon and today as well, these call writers at 24,200 have had to cover their positions, but the call writers at 24,400 are still holding their ground for a premium of almost 150 rupees. So levels upwards of 24,500 to 24,550 seem to be the new congestion zone. Short point, the range of the market has increased from 24,000 to 24,350 to around 24,200 to 24,500 itself. A bunch of IT stocks, fresh entrants into the F&O space, re-entrants are seeing a lot of long positions being added. Both KPIT Tech and Tata Elxsi stand out.
Interesting, Mangalam. Thanks a lot for that. Fresh long seen in a lot of these mid-cap IT names, and continuing again from where we left off yesterday. Time for a short break. Up next, a chart check on the indices and some trading strategies for you. Shivangi Sarda of Motilal Oswal joins us on the other side. Stay tuned. Back with us here on Halftime Report, a marginal cool-off from the highs of the day for the Nifty, now at that 24,400 mark. What should one do after this, and will this sustain as we go into the second half? Shivangi Sarda of Motilal Oswal Financial Services is joining us to answer just that. Shivangi, good afternoon. Thank you for joining in. Well, do you believe that this 24,350 will now sustain on a closing basis? And if that happens, so what happens next for the Nifty? And also couple that up with your stock-specific recommendations this afternoon.
Good afternoon, Mangalam. Thank you for having me. So we've seen that Nifty has witnessed a good recovery from the last three trading sessions. The put-call ratio have improved and is clearly sustaining above 1.2 levels, which clearly indicates that call writers are shedding off their positions, and put writers can be seen made a base here. It's still hovering near its 50 daily exponential moving averages, but the way RSI has turned and giving a positive divergence, there is possibility that 24,500 will get uncovered soon. So we are looking at 24,750 as the next marks for Nifty, with a support of 24,150. So buy on decline to continue over here. Of course, December month is a little lackluster that way, but all the data set up conclude that it's looking quite positive. Talking about Bank Nifty, we've seen that there has been a good short covering move here and a consolidation breakout of the last four trading sessions. It's comfortably holding above 52,500 marks, which is a good base here. Now, we are expecting some of the heavyweight banking counters to now again regain strength and drive this index. So watch out for this one as well. Now, the next levels that we're watching out is 53,500 for Bank Nifty, with a support of 52,250 levels. Now, talking about stock-specific ideas, the first stock that is on my radar is UltraTech Cement. From the last three trading sessions, we've seen a remarkable price volume surge here. It's given a consolidation breakout of the last 5 months. So clearly there is strength visible after a good base formation, and now buying interest is emerging even at these levels. So looking quite positive. The stock is trading above its key exponential moving averages as well, and we're expecting this up move to continue with good amount of longs being built up and a good open interest addition here. So recommending a buy here with a target of 12,400 levels with a support of 11,650 zones. Now, the second pick on my radar is TVS Motor. This is a short covering candidate. We've witnessed good rollovers here, and the way the stock has started moving from the last three trading sessions after halting at the base for the last 25 trading session, this indicates that the stock is quite stable And weekly basis, there has been a negation of the lower top, lower bottom, which indicates that now bears are taking a back seat and bulls are becoming active here. So recommending a buy here with a target of 2650 and a support of 2500 level.
Take that point entirely. TVS Motor bounced off the 200-day moving average, now above the 20-day moving average as well. Shivangi, thank you for joining in. Take a short break. On the other side, we have a corporate conversation lined up for you. Jitendra Adya, the President Finance at Atul Auto, joins in to discuss their November auto sales. Welcome back. Let's get chatting with the management of Atul Auto. Remember, the company reported its November sales. Total sales up 25% at nearly 2,800 units. Domestic sales up 19%. EV L3 sales fell about 15%, whereas L5 sales tripled from 43 to 151. Jitendra Adya, who's the President Finance at Atul Auto, joins us now. Thanks a lot, Mr. Adya, for joining in. It's a good growth that you've shown year on year, especially as it came, post-festive season as well. But it's still fairly short of what you were targeting at a monthly run rate. I remember you saying that you would reach that 4,000 units per month in this year itself. If I look at this entire year so far, you've done about 2,700, 2,800 units per month on an average. Where do you see this number by the end of this year? And what's your target? Because you did say that this year you will cross last year's 26,000 units.
Very good afternoon to you, and thank you for having me on this show. First of all, yes, the November numbers obviously was expected little better than what we have delivered, but I'm happy that for quarter one we grew by 16%, quarter two was 19% up, and for quarter three, first 2 months, we are up by 25%. I believe that yes, by end of this quarter, fourth quarter, we are likely to reach to the close to our target. Obviously, EV is doing good for us, and we have started penetrating it at a certain location, which is likely to be expanded in quarter four. So with that strategy, I believe that we will be able to definitely deliver good volume. This year, yes, all in all, if we look at the situation till November, we are up by 40%, and if we maintain a little higher rate, we are likely to touch upon, somewhere close to 40,000 this year itself.
Mr. Adya, good afternoon. Thank you so much for joining in. You've mentioned multiple times in the past that FY25 numbers will be better than FY24. You're already at 60% by the first half of this year, which means if we go by the current growth rate, you will easily surpass your targets. Have you thought about increasing your guidance for FY25 when it comes to top-line growth?
See, I would like to remain a little conservative. Let me deliver first, and we will definitely try to, reach out a pre-COVID level first. That is the first milestone which we would like to achieve. But I am happy and excited that there is a good news from all the front. First is in terms of product composition, we are having almost contribution of EV of around 28-30%, alternate fuel and diesel. That is one thing. Exports, yes, it is also moving in a good direction. We started delivering good numbers, and there are repeat orders from the same geography. Apart from that, in a domestic market, we are now up for expanding our network. I am happy to share with you that till November, we were able to add 40 new dealers in our system. Of course, there were certain, correction at some geographies, but all in all, there are 40 new dealers which are likely to get in terms of business in quarter four.
All right, wonderful. So 40,000 units you will cross this year, and thereafter your target would be closer to 50,000, which was what you did in FY19 as well. I just wanted to understand a little about your EV mix itself, because, you know, if you look at the numbers for the month of November, EV L3 sales fell by about 15% to 526 units, whereas L5, a product for which you very recently got approval, that increased from 43 to 151. So is it because L3 guys are now buying L5? What is the run rate that we should see from both L3 and L5 over the next few months and perhaps 12 months, if you can give us a longer term view?
L3 is, such a product which is mostly replacing, that pedal cycles, and obviously it has got its own parameters for buyers or end users. L5, yes, that is the perfect product which can definitely replace conventional vehicle. And here we were a bit stuck for our PM e-drive approval. Now I believe that it is likely to be clear very soon, and we will be able to just, put up that particular vehicle at all the locations or all the dealerships. As of now, we are doing it in a very limited locations. That is number one. About a long term, yes, we have for L5, we have a variety of the products. We have our own battery pack where we can offer single battery as well as dual battery, which can kill range anxiety issue. Apart from the range anxiety, we have multiple variants available for this particular applications, passenger or cargo. And another solution for which we have tied up with Honda, that is a swappable battery solution. So combo of this, I believe that in a long run, definitely we are going to make up in L5 category as well. About L3, yes, it is a market for certain geographies where we are doing good, and we are keep on penetrating at deeper pockets. Numbers I would like to just stay for a while. Maybe in the next introduction, I will be able to give better clarity on the volume.
But what does that do to the overall EV mix, Mr. Adya? Because you had mentioned in the last time we spoke to you that you intend to get EVs to be a third of your mix by the end of this financial year. Are you on track for that, part one? And part two of my question is related to exports as well, right? By November, your export contribution was around 11%. You plan to take it to 15 to 25. When does that happen as well? If you can share a timeline for that too.
So let us first understand EV currently is contributing around 28% in my sales contribution, very close to 1/3 of overall mix. So with deeper penetration of L3 and L5, very soon we will be able to have that composition with enhanced volume or incremental volume. About export, what I said is in a mid-term, currently as it is contributing 11%, in a 3 years time, we will have a contribution of around 15% from 15 to 20% from exports. Where in whatever geographies we have dispatched the vehicles, we have and we are quite confident that going forward, whatever we have seeded, that is going to reap up the fruits.
All right, final question then on margins. With the product mix changing, at the same time you seeing higher capacity utilization, what is your outlook on margins this year and the year after when you reach 50,000 units?
You look at my first half result for first 2 quarters, it has improved. Raw material consumption has improved, and definitely since the commodity prices are stable, I expect that it is going to improve going forward. Margin profile for each of the categories more or less same, though obviously diesel contributes on a higher side. But it will keep on improving with the higher scale of volume.
All right, Mr. Adya, thank you so much for sparing time, joining us to share your views on the road ahead for the company. Wish you good luck for the second half of the year. That was the management of Atul Auto, the stock in a 5% upper circuit as we speak. Time for a short break. On the other side, Manisha Gupta joins in with R.K. Janamani, the senior scientist at the IMD. Stay tuned. Back on the other side.
I've had the privilege of being part of the family, and when I was running Bicom 18 for nearly a decade. So many congratulations to you, first of all. I would like to say on behalf of Fevicol to CNBC as well, I think with all the wonderful work which you guys are doing, your bonds with everyone whom you interact with, Mangalam, personally and of course as a channel, I hope continue to become stronger and stronger.
Welcome back. Joining us on the show now is Mr. R.K. Janamani. He is Senior Scientist, India Meteorological Department. Mr. Janamani, hi, thank you so much for joining us. And yet another year where we are looking at a delayed winters. I remember last year was a similar case, but this time around, 2024 as a year has seen more warmer months than we've seen in many years, would you say?
Yeah, October was the highest as we have seen, the warmest, and then November also almost similar trend of North India, and all India also second highest minimum temperature. December, if you see today, 3rd December, we still have a temperature, say Maharashtra, it is 15 to 22 degrees centigrade, very high temperature, and positive anomaly also 5 to 8 degrees above normal. Similar for Punjab also, we are not getting below 10 degrees centigrade till today. Character is that this cyclone which crossed Tamil Nadu coast still remnant lies as a well-marked low pressure area over coastal Karnataka and adjoining East Central Arabian Sea. Because of that, lot of moisture to South Maharashtra, Goa and Mumbai also. So naturally, when you have a high moisture easterly wind, so the temperature will not dip. We are not getting also active western disturbance these days. So for North India, we are expecting one western disturbance around 8. Maybe after that, temperature will start significantly falling. Yeah, and as we know, the rainfall-wise also, we did not get good rainfall in November, very low rainfall. So whatever rainfall, we have got very huge rainfall for last 3 days because of that system. We know what happened to Villupuram and then Pondicherry. And subsequently, last 24 hours, today, 3rd December, we have extremely heavy rainfall also extended Kerala, North Kerala, Kasaragod, and then coastal Karnataka also, like Udupi and Dakhin Kannada district, and also Bangalore has a 60 millimeter last 24 hours. So we have a rain over peninsular India, but most of the date of the November was dry, and only in the first 3 days of December we got a good rainfall.
Mr. Janamani, would a delayed winter also mean a longer delayed winter pursuing? I mean, do you see that getting into March as well, spilling over in the longer months?
I think, as the things may not be that way, because sometimes you get also, March and summer. So winter delaying starting does not mean that it will, extended period. It's very difficult actually. We don't go in that way. We just look for 10 days outlook or forecast. But anyway, we can see daily temperature is 9 degree, 10 degree, but it will come down to 7 to 8 degree next 3 days. But that will be for a temporary period, because again, western disturbance is coming around 7th or 8th. Temperature will go up plus 10 also, 8 to 11. Yeah.
Mr. Janamani, the other thing is really about... All right. The other thing is about La Nina, really, because there was an expectation that it would come.
Actually, as you know, yesterday we had the press conference, how, that has not still set in. So a lot of media was highlighting it will be intense winter, it will be colder, something like that. But yesterday in the press, I think IMD has clarified how the La Nina delayed, and that's why the temperature. We have given, I think, details yesterday for the winter 2024-25. Yeah.
Ms. Janamani, would you, this is yet another thing. Last year as well, the Rabi sowing was good, but then the weather really did not, was a spoil spot really. This time around, are those concerns? As you say, the winter will begin slightly delayed, but last year again, Jan, Feb, March wasn't as cold as was anticipated. What are we expecting this time around?
Actually, as you know, the main issue is the fog coverage. Actually, last year we had extreme fog scenario in January. So you were having, intense cold day and subsequently cold wave also. So that very difficult to visualize, so early. So we have to look for short range and look in that way. But the temperature is still higher than the normal, as we see in the observation till today. And it will continue also next 4-5 days, Maharashtra, Central India. Because, clouding and easterly wind pattern, we are not getting wind from Himalaya. So you will get higher temperature, particularly Gujarat, Maharashtra, Madhya Pradesh, Eastern India and whole peninsular India, as long as
Alright.
you have clouding and still rain.
Take that point,
next week.
Mr. Janamani. You know, we were hoping for a nice cold winter this time around. You know, the few days in November we did get that cool,
You know,
but he's
November
gone
was
ahead
the
and
hottest month in 5 years in
Yeah,
India.
that I am repeatedly telling. October was the hottest. November remain also in the similar trend, and December till 10 you will get also has a normal temperature most part of
Okay.
India except.
all right.
when-
Take that point. You've poured hot water on all our hopes of a cold winter. Thanks a lot, Manisha, for taking us through that conversation. Mr. Janamani, we'll probably keep our jackets away for December as well. Wrap up on this edition of Halftime Report. Business Lunch comes up ahead with all the market action.
For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards.